Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for July 14th going into the 15th. We're going to start off with the natural gas. Okay. I'm not going to go over all the higher time frame stuff in here, but the trade below 331.40 has brought in 467 ticks of pressure. The trade below 319.30 brought in 346 of pressure. The trade below 312.30 brought in 276 of pressure. And then I warned we're likely in the last stretch of the move down from 442.50 with areas of possible exhaustion below at 286.40 to 540 and 270 even. And we're holding the upper of these with a 284.70 low. Held it again today and bounced a little bit. The maintained gap higher tomorrow is going to leave a minor bullish reversal below. If this starts a bullish correction, it should be considerable. At least 400 ticks. We take out this exhaustion area below, we'll likely head down to test the next one lower. Okay, in the crude oil, I'm not going to go over all the higher time frame stuff. The trade back above 67.91 brought in trade up to 81.25. Bear with me a minute. For $13.36. Tuesday we left a minor bullish reversal below. We rallied 10.55 from the 70.72 open, and on July 8th we left a medium bullish reversal below that warrants a higher trade for days/weeks. So we've already seen days out of that for $7.44 from the 73.83 open. And then the trade above 79.09 right here warranted decent strength. But if we fail back below there decently, that's going to warrant decent pressure. That's going to come in at 78.60, minus 2 per hour, starting at 6 o'clock p.m. Eastern Standard Time. A decent penetration in there is going to be 150 ticks overnight. In the RBOB, or unleaded gasoline, left the maintained gap higher on the day again. The maintained gap lower tomorrow will leave a minor bearish reversal above. I'm not going to go over the higher time frame stuff in here. The trade above 287.06 warned of decent strength. We saw 39.63 cents of that coming in today, and a little bit more than that, up to 326.85. And about another 16 ticks, and then the break above 295.75 brought in 31 cents of strength on July 6th. We left a medium bullish reversal below that I said warns a higher trade for, in general, for days/weeks. We rallied 29.32 cents from the 297.53 open. Trade back above 299.44 has brought in 27.41 cents of strength, and then the trade above 304.58. I said warrants a decent strength. We've seen 22.27 cents of strength from that. If we were to fail back down through this line decently, that's going to warrant decent pressure. That's going to come in at 309.69 plus 13 per hour, starting at 6 o'clock p.m. Eastern Standard Time. I would also caution we may be in the last stretch of this move up with possible exhaustion up here to be aware of at 329.65 to 335.06. I'm not very strong on that though. We fell back down through below 316.22 to 315.51. That'll warrant a pressure. And like I said, a maintained gap lower tomorrow will leave a minor bearish reversal above. In the heating oil, the maintained gap lower tomorrow will leave a minor bearish reversal above. I'm not going to go over this higher time frame stuff. The trade above 320.04 has brought in strength up to 403.31. We had other areas to be long above at 317.353, 324.15, 327.58, and 354.53. Trade below 387.43 may bring in pressure overnight. In the Brent, the maintain gap lower tomorrow, leave a minor bearish reversal above. I'm not going to go over all the higher time frame stuff in here. I warned that the 69.38 to 67.80 area is a final area of possible exhaustion. And if we hold this and begin a new bull structure, it should be significant. Came shy of this with a 70.14 low and rallied to 87.55 and had additional areas suggested to be long above on the way up. Well, first of all, we had a maintain gap higher on July 7th that left the minor bullish reversal below. We rallied from 72.79, and then on July 8th, we also left a medium bullish reversal below. And from the 77.44 open, we rallied up to the highs here of 87.55. And then the trade below above 78.48 also warned of strength. A further break above this formation above here at 86.99. Minus 0.2 of a tick per hour starting at 8 o'clock p.m. Eastern Standard Time will warn of continued strength, likely back up to 93 plus. In gas oil, a maintain gap lower tomorrow will leave a minor bearish reversal above. I'm not going to go over all the higher time frame stuff. The break above 896.59 has brought in strength up to 1170.50 and had additional areas that are suggested to being long. On June 30th, we left a medium bullish reversal below that I said warned a higher trade for days/weeks. The trade above 914.25 also warned of strength. The trade above 942.75 brought in strength, and the trade above 960.22. And this is, if you recall, really started the move. I said we left the medium bullish reversal below here that would warn a higher trade for days/weeks, and we've seen a substantial run up. Tomorrow, the cadence going into tomorrow is the heating oil is the strongest of the three, the RBOB in the middle, and the crude the weakest of the three relative to one another. I would just note also that in general, understanding what these spreads are doing that I've written on the analysis makes a difference of 35 grand in just 3 weeks here, being low in the heat rather than the crude or RBOB. So, okay, thank you for watching, and I'll see you in tomorrow's podcast.